Are you trying to figure out how to properly collect sales tax? Collecting sales tax might sound complicated, but once you understand the moving parts, such as your registration, your platforms, and the role of marketplace facilitators, it starts to make a lot more sense. And in this video, we'll walk through what it means to collect sales tax, how it works on major platforms like Amazon, Etsy, and Shopify, and what changed in 2025 with Shopify's Shop app. First, here's what collecting sales tax actually means. When you register for sales tax in a state, that registration gives you permission from the state to collect tax on taxable sales made within that state. You're essentially acting as an agent for the state by collecting the correct amount of sales tax from your customers and later sending it to the state through your tax returns. In e-commerce, that collection happens automatically at the point of sale, typically within your online shopping cart or checkout flow. So when we talk about collecting sales tax, we mean correctly charging it on each sale based upon the location where the order is shipped. But how that process works can look very different depending on the platform or sales channel you use. Here's how collection works. If you sell through your own website using platforms such as Shopify, BigCommerce, or WooCommerce, you're responsible for setting up your sales tax settings, selecting the states where you're registered, and making sure the correct rates apply at checkout. However, if you sell through large online marketplaces, it's a different story, and that's where marketplace facilitator laws come into play. But what is a marketplace facilitator? A marketplace facilitator is a company that operates an online marketplace where third-party sellers list and sell products. While there are many out there, some of the most common or well-known marketplace facilitators are Amazon, Etsy, eBay, Walmart, and Shopify's Shop. We'll come back to Shopify for an important point to know. But when it comes to marketplace facilitators, their platform itself handles or helps with parts of the transactions, such as payment processing, fulfillment, or maybe even customer service. Under marketplace facilitator laws, these platforms, not the individual sellers, are responsible for collecting and remitting sales tax on taxable transactions. For example, if you sell through Amazon, Etsy, eBay, or Walmart, those platforms collect and remit sales tax for you automatically in nearly every state that requires sales tax. For most sellers, that's a big win because it's one less thing to worry about. The tax is handled by the platform and you'll see those transactions reflected in your payout reports. But there's a catch. Even though the platform collects for you, those marketplace sales still count toward your economic nexus thresholds in some states. Economic nexus is based on your total sales or transactions in a state. Some states include marketplace sales when determining whether you've crossed that threshold. So even if the marketplace collects and remits the tax on your behalf, your total sales volume could still trigger a registration requirement. That's why it's important to track all of your sales by state, including both your direct website sales and any sales made through marketplaces, to know where you need to register. With all of this said, we need to talk about Shopify because this part has changed recently and it's easy to misunderstand. Shopify operates two separate environments that matter for sales tax. The first is Shopify, the e-commerce platform. And this is where most merchants run their own online stores. If you're selling through your Shopify store, you're responsible for collecting and remitting sales tax in any state where you're registered. Shopify provides built-in tools to calculate rates and apply them at checkout, but it does not collect tax on your behalf. Second is the Shop, which is Shopify's shopping app and marketplace. Starting January 1st, 2025, Shop is officially considered a marketplace facilitator. That means that for any sales made through the Shop app, Shopify will collect and remit sales tax on behalf of sellers in states where marketplace facilitator laws apply. In short, this means that for sales made in your Shopify store, you must collect and remit taxes. To the contrary, for sales made through the Shop app, Shopify collects and remits the taxes. It's a subtle but critical distinction and one that can easily cause confusion if you're selling in both places. Please keep this in mind. Also remember that before collecting tax on your own Shopify store, you must be officially registered with each state. Please do not turn on sales tax collection until you have your permit. And when you register, make sure the effective date matches the date you actually start collecting. Doing so will keep your filings accurate and compliant. Collecting sales tax is really about setting up the right process, registering properly, understanding who collects on your behalf, and ensuring your systems are configured to charge the right amount. But please remember these points. You can only collect once you're registered with the state. How you collect depends on where you sell, directly or through marketplaces. Collecting sales tax is really about setting up the right process, registering properly, understanding who collects on your behalf, and ensuring that your systems are configured to charge the right amount. Marketplace facilitators like Amazon, Etsy, eBay, Walmart, and Shop handle collection and remittance for most transactions. Some states still count those sales toward your Nexus thresholds, so monitor your totals carefully. When you understand who collects, where you owe, and how it all connects, sales tax compliance becomes a lot more manageable. But how do you know what products are taxable and what products are not? Well, for more information on that topic, check out this video. And remember, when in doubt, talk with a sales tax professional.